Based on the historical data and forecast, Bitcoin has shown volatility with a general upward trend. The RSI consistently remains below 80, indicating the asset is not overbought, and it has dipped below 35 on several occasions, suggesting potential oversold conditions. The Bollinger Bands show that the price has recently been near the lower band, suggesting a potential bounce. Considering these factors, I recommend a long position strategy. Specifically, when the price touches the support level of $82,300, enter a long position. Set a stop-loss order at $81,500 to limit potential losses. The initial target price should be $85,200, which is the resistance level. To refine this strategy, I suggest a dynamic approach incorporating the RSI and Bollinger Bands. If the RSI falls below 30 near the support price, enter a long position at $82,300. Place a stop-loss order at $81,500. If the price touches the lower Bollinger Band, enter a long position at that price. Set a stop-loss order just below the lower band. The primary target price is the resistance level of $85,200. However, if the price breaks through the resistance, adjust the target price to $86,000. This combined strategy leverages both momentum and volatility indicators for enhanced returns. Based on the historical data and forecast, Ethereum has shown significant volatility with a recent downward trend. The RSI consistently remains below 50, indicating a bearish sentiment, with values frequently dipping below the oversold level of 20. Considering the forecast for the next week, the price is projected to remain around $1,530 to $1,450, further reinforcing the bearish outlook. Therefore, I recommend a short selling strategy. The entry price should be $1,530, placing the stop-loss slightly above the recent high around $1,570, setting it at $1,580 to limit potential losses. The initial target price can be set at $1,450, aiming to capitalize on the anticipated downward movement. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently trading near the lower band, suggesting a potential bounce, but the overall trend remains bearish. If the price bounces and reaches the middle band around $1,520, we should consider closing the short position or moving the stop-loss to break even. If the price continues to fall below $1,450, we can set a second target price at $1,450. This combined approach leverages both the RSI and Bollinger Bands to manage risk and maximize potential returns, adjusting positions based on dynamic market conditions. Based on the historical data and forecast, XRP demonstrates a fluctuating trend with periods of consolidation and minor upward movement. The RSI consistently hovers around the mid-range, occasionally dipping below 40, indicating oversold conditions. The Bollinger Bands show periods of contraction and expansion, suggesting potential volatility. Given these conditions, I recommend a combined strategy incorporating RSI and Bollinger Band signals. We will implement a strategy focusing on capitalizing on short-term price swings. The initial entry point will be $2.03 when the RSI falls below 30 and the price touches the lower Bollinger Band. The stop-loss will be set at $1.95 to mitigate potential losses if the price continues to decline. The first target price will be $2.2, coinciding with the upper Bollinger Band and a potential resistance level. If the price reaches $2.2, we will move the stop-loss to the previous day's low, around $2.14. The second target price will be $2.45, the resistance level, where we will take partial profits and adjust the stop-loss to break even. This combined approach aims to balance risk and reward, capitalizing on both momentum and volatility signals while protecting against adverse price movements. Based on the historical data and forecast, BNB demonstrates a fluctuating trend with periods of consolidation and minor upward movement. The RSI consistently remains between 34.6 and 50.8, indicating neither strongly oversold nor overbought conditions. The Bollinger Bands show a narrowing trend recently, suggesting a potential breakout. Considering the support price of $553 and resistance of $597, and the forecast prices hovering around $580 to $590, I recommend a moderately bullish strategy. We will enter a long position when the price touches the bottom of the Bollinger Band, which is $552. Set a stop loss at $547, just below the lower band, to mitigate potential losses. The initial target price is $581, aligning with the forecast for April 23, 2025. To refine the strategy, we'll incorporate the RSI. If the price reaches $581 and the RSI is below 80, we'll move the target price to $590. If the RSI reaches 80 before hitting $590, we'll take partial profits at $581 and place a stop loss slightly below the entry price of $552, around $550. This hybrid approach combines Bollinger Bands for entry and stop loss with RSI for target adjustments, aiming to maximize profits while minimizing risk. The overall portfolio will be 60% weighted towards this BNB strategy, with the remaining 40% allocated to other stable assets. Based on the historical data and forecast, Solana exhibits a fluctuating trend with periods of consolidation and upward movement. The RSI consistently remains below 80, indicating that the asset is not currently overbought. The recent RSI values hover around 40 to 50, suggesting a neutral to slightly bullish momentum. Considering the support price of $117 and the forecast prices, I recommend a long position. Entry price will be $120. The stop loss should be set just below the support level at $116 to mitigate potential losses. The initial target price is $124, aligning with the forecast price for April 18th and 19th. To refine the strategy, I will incorporate the Bollinger Bands. When the price approaches the lower band, it signals a potential buying opportunity. The forecast shows the price fluctuating around $120 to $124. If the price reaches $124, I will move the stop loss to the center of the Bollinger Bands, which is around $121. The final target price will be $126, based on the historical resistance level and the potential for further upward momentum. This combined strategy leverages RSI for identifying oversold conditions and Bollinger Bands for confirming trend direction and setting dynamic stop loss levels, aiming for a high return investment. Based on the historical data and forecast, TRON shows a slight upward trend. The price has been fluctuating within the range of $0.238 to $0.255, with the support price consistently at $0.246. The RSI values have been oscillating between 45.4 and 66.6, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing and widening, suggesting increasing and decreasing volatility. Considering these factors, I propose a strategy combining RSI and Bollinger Bands to capitalize on potential price movements. My investment strategy involves a long position with an entry price of $0.247 on April 17, 2025. The stop loss will be set at $0.246, just below the support level, to mitigate potential losses. The target price is projected at $0.249, based on the forecast and the upper Bollinger Band. The RSI is currently at 58.0, which is not yet in the overbought zone, so there is room for upward movement. If the price breaks above $0.249, we can consider raising the target price to $0.249. This strategy aims to capture short-term gains while managing risk effectively by utilizing technical indicators and support/resistance levels. Based on the historical data and forecast, Dogecoin shows a downtrend with increased volatility. The RSI consistently remains below 50, indicating a bearish sentiment. The forecast data further supports this trend, predicting a continued decline. Considering these factors, I recommend a short selling strategy. Entry price should be $0.155 with a stop loss placed at $0.163, just above the recent resistance level. The target price for this trade is $0.147, aligning with the lower end of the forecast range and a potential support level. To refine this strategy, we'll incorporate Bollinger Bands. When the price touches the lower band, it signals a potential oversold condition, but given the overall downtrend, we'll prioritize the short selling signal. If the price bounces from the lower band at $0.147, consider closing the position and waiting for a more favorable entry point. The combined strategy prioritizes the bearish trend confirmed by RSI and forecast data, while using Bollinger Bands for risk management and potential early exit signals. This approach aims to maximize returns while minimizing potential losses in the current market conditions. Based on the historical data and forecast, Cardano shows a downtrend with significant volatility. The price has been fluctuating between the support price of $0.559 and the resistance price of $0.745. The RSI consistently stays within the range of 33.2 to 49.0, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening, suggesting increased volatility. The forecast for the next week predicts a continued downtrend, with prices falling to $0.574. Therefore, I recommend a short position strategy focusing on capitalizing on the predicted downward momentum. My strategy involves entering a short position at $0.611, placing a stop-loss order at $0.65 to limit potential losses if the price unexpectedly rises. The initial target price is set at $0.574, aligning with the forecast price. If the price reaches this target, I will reassess the situation. If the downtrend continues, I will adjust the target price to the support level of $0.559. This strategy combines the RSI and Bollinger Band signals, aiming for a high-return investment while managing risk effectively. The RSI is not in the oversold region, but the Bollinger Bands are widening, indicating increased volatility and potential for a downward movement. Based on the historical data and forecast, Chainlink shows a downtrend, with the forecast price consistently below the recent closing prices. The RSI readings have fluctuated between 30.7 and 48.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increasing volatility. Considering these factors, I recommend a short-term short position strategy. Enter short at $12.2, with a stop-loss placed at $13 to limit potential losses if the price reverses. The initial target price is $11.7, aiming to capitalize on the predicted downward movement. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI falls below 20, consider covering the short position. If the price touches the bottom of the Bollinger Bands, it could signal a potential reversal, prompting a move to break even or a partial profit taking. If the price reaches the target of $11.7, consider taking partial profits and setting a new target at $11.5. This layered approach allows for flexibility and adaptation to changing market conditions, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Avalanche demonstrates a fluctuating trend with periods of consolidation and upward movement. The RSI consistently fluctuates around the 40 to 55 range, indicating neither strong overbought nor oversold conditions. However, the forecast data suggests a potential downward correction in the short term, with prices expected to hover around $18. Considering the support price of $17.9, a conservative strategy would be to initiate a long position when the price touches the support level. Specifically, enter a long position at $17.9, set a stop-loss at $17.7 to mitigate potential losses if the price breaks below the support, and target a profit at $21.2, aligning with the upper Bollinger Band levels. To optimize returns, we can integrate a dynamic RSI-based approach. When the RSI dips below 35, indicating an oversold condition, enter a long position at $17.8. Place a stop-loss at $17.6 and target a profit at $20.5. Conversely, when the RSI exceeds 55, signaling an overbought condition, consider a short position at $19.2, with a stop-loss at $19.4 and a target price of $17.9. This blended strategy, combining support level entries with RSI signals, provides a balanced approach to capitalize on both trend reversals and short-term momentum, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Jupiter exhibits a downtrend. The RSI consistently remains below 30, indicating oversold conditions. The forecast projects further decline, with prices dropping to $0.298. The support level is consistently at $0.333, while the resistance is at $0.491. Considering the downtrend and oversold RSI, a short position is recommended. The strategy is to short Jupiter at $0.362 with a stop loss at $0.381 and a target price of $0.333. This strategy leverages the predicted decline and a consistent support level. To refine the strategy, we will incorporate the Bollinger Bands. The price is currently near the bottom band, which could signal a potential bounce. However, given the overall downtrend, we will maintain the short position. A secondary strategy is to short Jupiter at $0.338 with a stop loss at $0.344 and a target price of $0.325. This approach capitalizes on the predicted decline. Combining these strategies, we create a portfolio with a weighted average, prioritizing the initial short position at $0.362 due to its more conservative risk-reward ratio. This portfolio aims for high returns by exploiting the predicted downtrend while incorporating risk management through strategically placed stop-loss orders. Based on the historical data and forecast, Pepe shows a slightly volatile trend with consistent support around $0.0000690. The RSI fluctuates between 38.2 and 52.3, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering these factors, I propose a combined strategy utilizing RSI and Bollinger Bands. We will initiate a long position when the RSI dips below 40 and the price touches the lower Bollinger Band, indicating a potential oversold condition. The entry price will be $0.0000680, coinciding with the lower Bollinger Band and a relatively low RSI value. A stop loss will be set just below the support level at $0.0000670 to limit potential losses. The target price will be set at the resistance level of $0.0000770, offering a reasonable profit margin. We will also consider a secondary target near the upper Bollinger Band, around $0.0000860, if the momentum is strong. This strategy aims to capitalize on short-term price rebounds from oversold conditions, while the stop-loss protects against significant downside risk. The forecast data suggests a price hovering around $0.0000690 to $0.0000710 in the coming days, further supporting the potential for a short-term upward movement from the current level. Therefore, this combined approach offers a balanced strategy with clear entry, stop-loss, and target points. Based on the historical data and forecast, DeXe shows a declining trend, with the forecast price consistently decreasing from $13.4 to $11.9. The RSI values fluctuate between 30.7 and 44.7, indicating periods of oversold and overbought conditions. The Bollinger Bands are narrowing, suggesting decreasing volatility. Considering the current RSI of 35.8, which is below the oversold level of 20, and the forecast showing a continued downward trend, I recommend a short position. The entry price for this short position should be $13.6, with a stop loss placed at $14.5 to protect against unexpected upward movements. The initial target price is $12.5, aiming to capitalize on the anticipated downward trend. To refine this strategy, we will incorporate the Bollinger Bands. If the price approaches the upper band, we will consider covering the short position or tightening the stop loss. Conversely, if the price touches the lower band, it could signal a potential reversal, prompting a review of the short position. After reaching the initial target price of $12.5, we will reassess the market conditions and potentially set a secondary target price of $11.9, aligning with the forecast. This dynamic approach, combining RSI signals with Bollinger Band analysis, aims to maximize returns while mitigating risk. Based on the historical data and forecast, PENDLE demonstrates a fluctuating trend with a general upward bias, supported by the resistance price of $3.46 and the forecast prices hovering around $3.2. The RSI fluctuates between 46.6 and 64.1, indicating periods of both oversold and overbought conditions. The Bollinger Bands show price volatility, with the current price nearing the upper band. Considering these factors, I recommend a long position strategy. We will enter a long position when the RSI drops below 20, with an entry price of $3.04. The stop loss will be set at the support price of $2.64 to limit potential losses. The initial target price will be the resistance level of $3.46. To refine the strategy, we'll incorporate Bollinger Band signals. If the price touches the upper band, consider taking partial profits at $3.46. If the price breaks below the lower band, it signals a potential trend reversal, and we'll adjust the stop loss to the center of the Bollinger Bands, which is currently around $2.99. If the RSI remains below 20 for 2 consecutive days, we'll increase the position size. The final target price will be $3.54, aiming to capture further gains if the upward trend persists. This combined approach leverages both momentum, RSI, and volatility, Bollinger Bands, for a more robust and adaptive investment strategy. Based on the historical data and forecast, PAX Gold shows a clear upward trend. The RSI consistently moved above 50, indicating bullish momentum, and the recent value of 73.8 suggests it's approaching overbought territory. The Bollinger Bands have been widening, indicating increased volatility and potential for further price movement. Considering the forecast prices, which predict a continuous rise to $3,580, I recommend a long position strategy. We will enter a long position at $3,360, placing a stop-loss order at $3,310 to protect against potential downside risks. The initial target price will be $3,470, aligning with the forecast high for the week. To refine the strategy, we will incorporate RSI and Bollinger Band signals. If the RSI dips below 40, indicating an oversold condition, we will consider adding to our position at the prevailing price, with a slightly adjusted stop-loss. Conversely, if the price touches the upper Bollinger Band, suggesting an overbought condition, we will consider taking partial profits at $3,510. The final target price will be $3,580, reflecting the highest forecast price. This combined approach leverages both momentum and volatility indicators for optimized returns while managing risk effectively. Based on the historical data and forecast, NEO exhibits a volatile trend with a recent upward movement. The RSI consistently remains below 42.2, indicating that the asset is currently oversold. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential bounce. Therefore, I recommend a long position strategy. Entry price should be $4.82. The stop-loss price should be set at $4.73, just below the support level, to mitigate potential losses if the downtrend continues. The initial target price should be $5.17, aligning with the first forecast price. To optimize the strategy, I propose a dynamic target price adjustment based on the RSI and Bollinger Bands. If the RSI reaches 60, we can adjust the target price to $5.34. If the price touches the upper Bollinger Band, we can adjust the target price to $5.53. This approach allows us to capitalize on the upward momentum while managing risk. The portfolio should prioritize this long position, allocating approximately 60% of the capital, with the remaining 40% held in reserve for potential adjustments or alternative opportunities. This strategy aims to achieve high returns by leveraging the oversold condition and capitalizing on the anticipated upward trend. Based on the historical data and forecast, Solana exhibits a fluctuating trend with periods of consolidation and upward movement. The RSI consistently remains below 80, indicating that the asset is not currently overbought. The recent RSI values hover around 40 to 50, suggesting a neutral to slightly bullish momentum. Considering the support price of $117 and the forecast prices, I recommend a long position. Entry price will be $120. The stop loss should be set just below the support level at $116 to mitigate potential losses. The initial target price is $124, aligning with the forecast price for April 18th and 19th. To refine the strategy, I will incorporate the Bollinger Bands. When the price approaches the lower band, it signals a potential buying opportunity. The forecast shows the price fluctuating around $120 to $124. If the price reaches $124, I will move the stop loss to the center of the Bollinger Bands, which is around $121. The final target price will be $126, based on the historical resistance level and the potential for further upward momentum. This combined strategy leverages RSI for identifying oversold conditions and Bollinger Bands for confirming trend direction and setting dynamic stop-loss levels, aiming for a high-return investment. Based on the historical data and forecast, Curve DAO demonstrates a volatile trend with recent upward momentum. The price has bounced from the support level of $0.559 and tested the resistance level of $0.788. The RSI fluctuates between 41.7 and 64.5, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has been trending within the bands, with recent movement towards the upper band, suggesting bullish pressure. Considering these factors, I propose a strategy combining RSI, Bollinger Bands, and support/resistance levels to capitalize on potential upward movement. My strategy involves a long position with an entry price of $0.592. The stop loss will be set at $0.559, just below the established support level, to limit potential losses. The initial target price is $0.632, aligning with the recent high and providing a reasonable profit margin. If the price breaks through the $0.632 level and continues to show bullish momentum, I will adjust the target price to $0.788, the resistance level. This strategy utilizes the RSI to avoid entering when overbought, the Bollinger Bands to confirm the trend, and support/resistance levels to define entry, stop loss, and target prices, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Raydium shows a clear upward trend. The price has consistently tested and bounced off the support level of $2.18, while approaching the resistance level of $2.86. The RSI values have fluctuated but generally indicate a strengthening momentum, with recent readings above $40 suggesting a bullish sentiment. The Bollinger Bands have been widening, indicating increased volatility and potential for price movement. The forecast for the next week projects continued upward movement, further reinforcing the bullish outlook. Therefore, I recommend a long position with an entry price of $1.96. Given the strong support level, a stop loss should be placed just below it at $2.14. The initial target price should be set at $2.25, aligning with the upper end of the forecast range. To capitalize on the upward trend, we can implement a trailing stop-loss strategy, adjusting the stop-loss upwards as the price increases. If the price reaches $2.25, we can consider moving the stop-loss to break even to protect profits and potentially set a new target price closer to the resistance level of $2.86. This combined RSI, Bollinger Bands, and trend analysis approach should yield high returns. Based on the historical data and forecast, Solayer exhibits a strong upward trend. The price has been consistently increasing, and the forecast predicts further gains. The RSI values have generally been above 50, indicating bullish momentum, with occasional dips below 60. The Bollinger Bands have been expanding, suggesting increased volatility and potential for further price movement. Considering the forecast data, the price is expected to reach $2.22. Therefore, I recommend a long position with an entry price of $1.99. To manage risk, set a stop loss at $1.87, just below the recent low. For the target price, aim for $2.22, aligning with the forecast high. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI dips below 30, consider averaging into the position, buying at $1.78 with a stop loss at $1.68 and a target of $2.09. If the price touches the lower Bollinger Band, it signals a potential buying opportunity. For example, if the price drops to $1.16, enter a long position with a stop loss at $1.06 and a target of $1.85. This layered approach, combining trend analysis with RSI and Bollinger Band indicators, maximizes potential returns while managing risk effectively.